So this video is for every business owner out there, whether you're an online business owner or you own a small business like a little boutique. We wanted to kind of dive deeper into how to qualify for a mortgage.
Yeah, absolutely. So in the last couple of years, especially during COVID, when a lot of people lost their jobs, they started their own businesses. They went out. You've got these online platforms. I mean, OnlyFans is huge, not just for what people think it is, but you've also got Twitch streamers. You have influencers, people.
TikTok, YouTube, they're making tons of money. So
yeah, and so we're seeing them start to buy houses. They've made a lot of money. Some of them are buying cash. Some of them are going to go the financed route. And what you need is 2 years of tax returns. And when I say tax returns, you got to show money. So if you file your taxes and you made $500,000, but you wrote off $475,000, you only made $25,000, and that's what we're using to qualify. So I would tell all my self-employed buyers, hey, make sure that you're showing enough income that you can satisfy whatever you're trying to do in life. If it's buy a house, same thing buying a car. You need to show income, because if you don't, nobody's going to lend you that money because they assume you can't pay it back.
And once you actually buy your house and your mortgage is done on everything, then you can go back to writing off things, and unless you're planning to do rental properties or investment properties. So it's just for 2 years. You can kind of make the sacrifices for those 2 years, and that way you can qualify for a more appropriate home for you.
And it is an average. So keep in mind, if let's just use 2020 and 2021, if in 2020 you showed 80,000 and then in 2021 you showed 120,000, that's good. We average it in the middle. However, if you have a decline, usually over 20-25%, it's a red flag. So if you made $200,000 in 2020, made $100,000 in 2021, you're probably going to have a hard time securing a mortgage, because that's a huge drop in pay. And it obviously raises red flags because you don't have a W-2 to guarantee that you're going to make that money each week.
Yeah. You also want to keep in mind, you want to talk more about if you get like cash deposits, if you make your income cash, you want to dive deeper into that.
Cash is always hard.
Yeah.
Cash, you need receipts, because we have to back out anything that we can't source. Yeah. So if we see, tens of thousands of dollars in cash deposits, and we see this with people just selling their property. One of my clients went and sold his truck, and he was like, hey, $13,000 is coming from the sale of this. I said, but do you have a bill of sale? Do you have the title? Talk to a loan officer, talk to a professional before you make these decisions or you start moving forward with it, because there is a seasoning requirement. And if we know you have a lump sum of cash, we're going to tell you just deposit it into the bank and let it sit there for a few months. That way we don't have to go through the sourcing of it. But if your business is cash revolving, we need receipts and records to back that up. Otherwise, it does kind of look like money laundering. And that is one of the big things that came out of the early 2000s with the crash. They are stricter and they want to see these receipts.
Yeah. So if you're self-employed, just be sure to reach out to either me with Piney Woods Realty or Drew Eads with Homespire Mortgage and just ask us questions. We're always available. And getting a loan for self-employed isn't as hard as it sounds. The main thing is just making sure that you file your taxes properly for 2 years.
Absolutely. It's a lot of paperwork up front, but we make the process really easy. So if you have questions, reach out to myself, reach out to Ksenia. We'll be happy to point you in the right direction.
Thank you.
Thanks.